I think people are finally waking up that something might be wrong. I mean,
by my demographic analysis, the greatest boom in history. When I was predicting this in the 80s, people thought I was crazy, that the U.S. could do so well. They thought Japan and Asia was going to take over the world. I said, no, that we still have a giant, one of the best baby booms in history coming along, and they're going to spend and earn a lot of money, and we're going to have the greatest boom in history from 1983 to 2007. And then 2008, of course, it did go down. And I predicted that 20-some years before it happened, okay? But forget that. That caused a shock to the economy. And then governments have been printing money ever since.
Hey guys, welcome back to Library of Wealth. Today we have Harry Dent on the future of Bitcoin and the economy. Dent believes that banks will soon write down mortgages because they've been issuing unsustainable mortgage loans to their clients. He says that because this inflation has been artificially created through stimulus over the past 13 years, he's confident that it will be brought down through recession and won't make a comeback as long as no new money is printed. Dent predicts Bitcoin will decrease to the 2018 low of $32.50, but the more it moves, the less downturn will be generated. Let's listen to this interview with Harry Dent as he gives his take on Bitcoin and its role in the financial market. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
Now, to print money for a year to overcome a strong downturn like 2008-9, I'd agree with that. 1 year of money printing. To be printing money 13, 14 years and escalating and printing and fiscal stimulus combined after COVID for 2 years, $10 trillion, half of GDP, is insanity. So this shows how crazy things have gotten. Well, what we have now is we have the greatest bubble in history because governments fought the slowdown after 2008, which was very serious and would have been more serious and should have lasted into 2010, much like the 29 to 32 collapse. They just bubbled up financial assets. They haven't changed, incomes and stuff. They bubbled up financial assets, which means the rich, which were already getting richer in the greatest bubble boom in history, got even richer, and everyday people are still struggling. And now we have an economy, and I've been warning for years, I don't know exactly what's going to happen, but it's happening now. You can't do this forever. You can't just print money and grow an economy past its fundamentals of what I study better than I think anybody in the world. When do people earn and spend money over their life cycle? What's the life cycle of people, and how do generations, particularly the largest in history, at least the largest in 250 years, the baby boom generation, affect that boom and bust? And we are still in the bust wake of the baby boom's peak into 2023-24 before we can grow through natural causes. And I see that this government printing scheme is now failing, despite printing more and more, failing anyway, because you can't do this forever, and it's going to collapse, which is just in time for us to balance out the economy so we can grow again with the millennial generation from 2024 forward. So I'm happy to see this collapse. I'm happy to see a downturn, damn it. We should have had a bigger one in 2008, 9, and 10 and got rid of most of this bad debt. Now we have more bad debt than ever. We're going to get rid of it in the next few years. It's going to be painful.
Dent believes that Bitcoin will not bottom this year because of the size of its bubble. He's extremely bullish on everything to do with digital currencies, but it needs to reach maturity by crashing down to an affordable price. He says that gold will decrease, but will do better than any other commodity. Both Bitcoin and gold will probably crash before anything in the stock market does.
I mean, it's not only factual, it's common sense that you can't just grow by printing money out of thin air. I mean, how common sense could it be than that? We've been printing money since 2009.
Harry, tell us how you really feel.
I mean, this is insanity. If we see another wave down, which would be the logical thing, forget everything we're saying. If I'm just looking as a stock chartist, we had this first crash, a tepid bounce, and we have another one of the same magnitude. We're going to see 73.50, on the NASDAQ, down more than 50% by late this year, early next year. And then people are going to know something is really wrong.
So, Harry,
so that's the problem now. It did crash. And the bigger problem is government said, well, we're not going to let it crash. And I'm like, who the hell are you?
But Harry,
who are you to
Harry,
think a bunch of politicians that never did anything for a living, most of you, and say, oh, we're just not going to let the economy do what the economy will do to correct an imbalance of overinvestment in bubbles and financial assets and bring them down to normal so we can grow again. They're fighting. All I do is research what happens in history and what causes things and what doesn't. And that's the truth.
So,
and you do not get a bubble like this. There has been no bubble any time in all of history that has not burst badly and rapidly when it does, and it's already started. Everyday people didn't used to have so much money in stocks. It was more in real estate. And real estate does not go down like stocks does. Real estate is more stable even when it goes down. And everybody now has to root for this thing to keep going. And so they'll listen to the people that say, oh, no, don't worry about this. Don't worry about debt levels. Don't worry about demographics declining, which they're declining at the speed of light in all developed countries in the world. Somehow the government will bring us out of this. If you invest today, even with no predictions of up and down economy, you're likely to make, a couple % a year for the rest of your life. You're not going to be able to retire profitably until the markets come down to reality and you can invest at fair asset prices again.
Okay, look.
They're causing a slowdown, and instead of governments helping to restructure debt, we've got tons of bad debt now from the great boom from 83 to 2007 that needs to be restructured. They're encouraging people to keep that bad debt in place and not to reinvest in new industries and stuff. They're doing all the wrong things because they don't want to have a recession. You know what recession is to me? Sleep. Try not sleeping for 3 days and not become a crazy person. And just when it needs to restructure, they screw it up so we can never grow again because we never restructure bad debt. So all this stimulus throws money into the economy. What do governments do with this stimulus? They buy financial assets. They start with bonds, but the more money goes in bonds, it will trickle into higher valuation stocks and real estate because that's where the returns are. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. Okay, 600 trillion, that's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 30 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they've tried to pump it up and it's failing anyway. So financial assets keep falling.
Dent states that gold is no longer a protection against inflation. There has been a massive deflation in the entirety of the gold asset bubble, and gold's value will continue to fall dramatically. He believes that treasuries are the newest hedge against inflation, with AAA corporates as second best. Dent says the smartest thing to hold on to is treasury bonds, but the simplest is ZROS. He feels that we're coming towards a global digital currency system, with Bitcoin as the standard, which will continue to expand with the economy. The US dollar will begin to go sideways and lose its position as the reserve currency, but will continue in correlation to Bitcoin. What do you guys think of Harry Dent's opinion on Bitcoin as the new global standard? Let us know in the comments. Guys, thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.